Welcome back to CryptoFi Invest, everyone. Hope you guys are all having a great day today. I want to show you guys some key data and indicators that are suggesting once again that the move to the upside could be potentially higher. And I'll discuss and show you guys why do I think this and why we could be potentially in what do you call it, a bullish semester, I'd say, a window of opportunity. Let's dive in, right? So I'll start off showing you guys the target that I'm aiming for, right? And then I'll go on to explain why do I think we can reach to these levels. So my target currently is at Fibonacci level retracements at 0.702, which is around between 40 and $50,000 by mid-year. And I'll explain it to you guys why do I think mid-year. And I think there's a really good opportunity for this semester's where we have something that's sort of like a Goldilocks zone for the economy, for the markets, and for the investors. Okay, so let's dive in. First of all, let's go to Game of Trades Twitter account. He just posted a chart that's telling us from Glassnode that money sitting in the sideline on the sidelines are rushing back into cryptos. Stable coins are now being deployed at a rapid rate. You can see that every time stable coins go back into crypto projects and cryptocurrencies, it's followed or usually it moves along with a bull rally or even a real bull market, right? So you can see that this happened 2019, 2021, again when we had the minor capitulation afterwards, 2021 again, all the way up to November, and we're getting the same signal again. So money is starting to flow back into the market, right? And this is a tweet that we posted a few days ago where investors not convinced of bull transition currently holding record cash levels. 5 trillion of cash sitting in US money market funds. Okay? Now, when you first read this, you might think, so it might not be the time to invest because all these hedge funds are holding cash, nobody's investing. But this is what you have to think, right? So there's a record amount of cash on the sidelines. $5 trillion is a mountain of money. You want to try to front run this money. And I think they're going to start DCAing or putting funds back into the market very, very soon because of all of the economic data that we've received in the past couple of weeks, right? $5 trillion on the sidelines. If they sneeze, you get a bull rally. I guarantee you. Okay? Now, also, one of the tweets that this is a technical chart, technical analysis. It's basically just a falling wedge and how it performs. So this is a measured move from a falling wedge. You get the bottom of the opening of the wedge, and when you get a breakout, usually it's the same percentage move to the upside from the bottom to the top. There, it's what you'll get here. This would give you, up to $48,000 to $50,000. 130% gains from the breakout, right? Now, going back to economics, we've had interest rates rising rapidly, 0.75%, 0.50%, and now 0.25%. This means the Federal Reserve is likely to pause sometime soon. The mission is not to break the economy or to make everybody unemployed, right? The mission is to reduce inflation. And what's happening with inflation? It dropped from 7.10 already to 6.5. And it keeps dropping and dropping. We went from 9.5 all the way to 6.5. And the target is, obviously, they want inflation rates to be below their interest rates. But they need to give time for the market to adjust these rapid interest rates that they've been giving to the market. Okay. Also, unemployment Everybody was really concerned that with the rapid rise in interest rates, it will cause a lot of unemployment, which obviously makes sense. But that's not what the data is giving us. That's not what it's suggesting. Fears of recession and everything. Previous unemployment rate was 3.5. Last computed from January is 3.4. So it went down. So everybody's working. The economy is productive. The economy is showing signs of strength. That's not indication of a recession. We just had a positive GDP growth with the unemployment rate down, inflation going down, and interest rates set to pause. It's what I call possibly a window of opportunity. Again, we've got 5 trillion of cash sitting on the sidelines. Now, do you wanna put your money after 5 trillion goes back into the market or before? You want to be there before so they can raise your levels with the market, right? You don't want to be late to the party. Um, I'll give you the bearish case in a moment because obviously we don't have a crystal ball. We can't see the future. But there's a lot of indicators, technical indicators, economic indicators that are suggesting to me there's a lot of potential to the upside, right? So going back to this chart, crypto indicator. I want to release this to the public so everybody has access to CryptoFi indicator. We're fine tuning it so it gives us precise, suggestions and indications of market performance. Uh, and as you can see, it gave us a strong buy signal a few weeks ago. That was just before this big move to the upside. Sorry. And the RSI, sorry guys, the RSI movement. Okay, let's see if that works now. The RSI went from overbought levels from the top of the bull market and it broke the trend, the momentum trend. I don't care who you are, from this RSI, from overbought to oversold, breaking this trend here of momentum and breaking this trend here on the price chart, this is a break of a trend and momentum shifting directions in the market. I don't care who you are, you can have whatever opinion. This is what the chart is telling me. This is the traditional charting analysis. It broke the trend. It could go sideways, it could do anything, but the trend is broken. All right. So the likelihood to continue up to the moves, continue moving to the upside is probable. It's probable. We had a strong buy signal for the CryptoFi indicator, break on the RSI, and I'll show you guys what I mean. If you look at the volume indicators, right? There we go. This is what I call a pocket right there. This is an air pocket. Air pocket means there's no price action here. For all the way from 25 to 28 to 30, there's an air pocket. So what we need is to take out these levels, which is the previous local high around $25,000. Break it up, confirm this level here, air pocket, no resistance whatsoever. We're gonna go straight up to $28,000. I mean, it's not that we're gonna go straight up. There's a real possibility that we could go up straight up to $28,000. Okay, let me rephrase that very clearly because there is a bearish scenario, and I'll show it to you guys. All right, so let's get rid of the RSI down here. There is a potential move to the downside as well, short-term downside. This is the bearish scenario, right? Why? Because the same way we had an air pocket up here, there's a bit of an air pocket here as well, right? So if we don't confirm this level and we break to the downside, there's no support as well. There's no support. So we could go all the way down, grabbing all of this liquidity where there's a lot of price action around the $20,000 before we continue to the upside. Okay, so that's the bearish outlook. I don't think we are gonna do this type of move, because if you look back in 2019, this is a great example. Okay, this is from JJ Cycles. This is what happened in 2019, right? So this is what he wrote. Surely price will grab all the liquidity soon, which is referring to the liquidity underneath, right? From here. Said all of the crypto Twitter for weeks and weeks. So everybody's waiting for a pullback to grab that liquidity from down here from these levels. And price seems not to be doing that. It just keeps going up, consolidation, up. It's been consolidating again. Everybody's expecting it to come down and grab all of this liquidity down here around the $20,000 level. And this is what happened in 2019, right? Same sort of scenario. Very similar price action. You get a big jump to the upside. Everybody's still bearish because of the capitulation that happened in 2018. And the price really never went down to grab liquidity. It just kept rising up. And then you know what happens here. If you zoom out a little bit, once we get to these levels, 30,000 level, 28, 30, and we consolidate, then you're going to start seeing a lot of the bears flipping into bulls, right? They feel FOMO. They think they're missing on the action because they've been waiting since $15,000, calling for 10,000, saying the world was going to end, blah, 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 whatever. And now price starts moving up and consolidate at 30,000, which is 100% gains from $15,000. They start to FOMO in. And a lot of new participants in the market start to FOMO in. The hedge funds in the market holding $5 trillion of cash sitting on the sidelines start to FOMO in. And this could bring fuel to a final move all the way up to $45,000, $50,000, right? So anything can happen. This is just a bullish scenario, a bullish case, looking at all of the data and the technical charts and what's the sentiment in the market. This is what I can see happening. There's a real possibility of this happening during this semester. After we get to these levels, then we come back here and reassess, but there's a real chance, all right? Bearish case, obviously we come back, retest $20,000. Something crazy happens, a war, some really bad news in the market, and we can continue down in the depression levels in an extended bear market, okay? But we did break the trend. We did break from the oversold levels. Big jump to the upside. Momentum is positive. I think we are looking good for this semester to come. All right, this is not financial advice. I'm not telling anybody to buy anything or anyone to sell anything. I'm just giving you guys what I've been researching and what my team has been researching in the market, so you guys can make your personal investment decisions, just to help you guys navigate the market, giving you a clean outlook of what's happening out there. All right, so that's it for me today. Hope you guys enjoy the rest of the week, and yeah, have a good one.